Welcome to the Wingsfolio Friday Roundup. I'm Nick. It has been a week. Markets are down. Everyone's panicking. My pager has not stopped buzzing, and I have aged approximately 7 years since Monday. As always, I've brought in the wisest man I know, a man who has survived 19 recessions, multiple wars, the dot-com bubble, and somehow still thinks a McDonald's cheeseburger is a perfectly acceptable lunch. Baby Warren, how are you doing, sir?
Nick, I had the best week. I read earning reports, and I'm eating a hot fudge sundae. Life is excellent.
Okay. So Monday, Tuesday, beautiful. Markets at all-time highs. MRVL up 30%, HPE up 26%. Everyone celebrating. Then Wednesday night, Broadcom reports record earnings, the best quarter in the company's history. AI chips up 143%, and Wall Street punishes them. The stock drops 15% and wipes out nearly $300 billion because the guidance missed by $360 million on a $22 billion quarter. Baby Warren, explain this to me like I'm 5 weight. I am 5.
Okay.
You don't look a day over 4. I'll explain. Imagine you ask your mom for a cookie. She gives you 4 cookies, but you wanted 4.5 cookies because your friend Billy told you there'd be 4.5, and now you're crying on the kitchen floor. That's Wall Street. Broadcom made $22 billion. Their AI chips grew 143%. They have a 69% profit margin. Do you know what that means, Nick? It means if they sell you $1 of something, they keep 69 cents. That's basically printing money wearing a lab coat. But the market said you were supposed to make $16.36 billion in AI chips next quarter, and you only said $16 billion. That's $360 million less on a company worth hundreds of billions, and everybody lost their mind. You know what I call that? I call that Mr. Market throwing his cookie on the floor and crying. Don't be like Mr. Market, Nick. He needs a nap.
He really does. Okay, question 2. Friday, jobs report drops. The economy added 172,000 jobs, double what everyone expected. The American economy is doing great. People are working. Money is moving. And the stock market, upon hearing this wonderful news, immediately fell apart. S&P down 2.6%. Dow down 700 points. NASDAQ down 4%. Baby Warren. The economy is thriving. Why is the market crying again?
Nick, okay, you're 5 now. Imagine you and your friends are at the best birthday party you've ever been to. There's cake, there's balloons, the bouncy castle is incredible. And then someone walks in and says, great news. The party is so good that Mom said there'll be more parties. And everyone screams and runs out the door. Why? Because more parties means the parents stop giving you extra candy to make you happy. They figure you're already happy enough. That's the Federal Reserve. When jobs are strong, the Fed says, economy's fine. We don't need to cut interest rates. And the market, which has been sitting at record highs for 9 straight weeks, has been counting on those rate cuts like a kid counting on extra Halloween candy. Take away the candy, everybody panics. Add in oil at $96 because Iran decided this was a great week to make geopolitical decisions, gold falling, yields rising, and suddenly Mr. Market, who was just dancing on Monday, is face down on the carpet by Friday. But here's what 5-year-old Nick needs to understand. Did the American economy break? No. Did Broadcom stop making chips? No. Did Marvell's business stop being essential? No. Did anything real change about whether AI is the future? Absolutely not. The bouncy castle is still there, son. Mr. Market just forgot where it is for a minute.
Okay, final question. What do actual grown-up investors do right now? Because people are scared. They're selling. They're checking their portfolios every 7 minutes. What's the move, Baby Warren?
All right. I'm going to put down the Sunday for this one. Here's what you do. You make a list. Not a grocery list, a business list. You write down every company you own or want to own, and you ask one question. Did the business change this week? Not the stock price, the business. Does Broadcom still build the only chips that Google and Meta and Anthropic need to train AI? Yes. Does that matter in 5 years? Yes. No. Did Iran change that? No. Did Wall Street's $300 million tantrum change that? Absolutely not. Now, some stuff is worth watching. Oil at $96 is real. The Fed potentially hiking rates instead of cutting is real. Iran is real. You don't ignore those, you keep them on your radar. But the investors who got rich, not just okay, not just fine, but genuinely wealthy, they weren't the ones who sold on the worst Friday of the month. They were the ones who showed up Monday morning with a list of great businesses and a little bit of courage. The stock market, Nick, is the only store in the world where people run out when things go on sale. Everything else, shoes, groceries, cars, people love a sale. Not here. Here they panic. Be the person who loves the sale.
That's your Wingsfolio Friday Roundup. If this made you smarter and slightly confused about cookies, you're exactly where you should be. Follow us on Instagram, Facebook, and YouTube at Wingsfolio, where we make investing make sense, even if you're 5 like us. Hit subscribe, ring the bell, and we will see you Monday. Go enjoy your weekend. Baby Warren, any final words?
Buy good businesses. Don't panic. And for the love of everything, stop checking your portfolio on your phone every 7 minutes. Nothing good has ever happened in 7 minutes.
Dumb. Sorry, I was texting my mom.